Good morning, traders. Today is June the 21st. My name is Neville Hornsey, market analyst with YouTrading, and today I'm joined by
Joel Frank, also market analyst for YouTrading.
How are you doing?
I'm all right, mate. How are you doing?
Very good. Yeah, just
nice.
The weekend was good. Father's Day, all that type of stuff. So yeah, happy.
Yeah.
What about you? Do you have anything fun to do?
Well, the fun of my weekend was getting my Pfizer vaccine. So I've got a dead arm, but I haven't been too ill or anything, luckily. So
I had Pfizer.
Maybe did you as well?
I think I must have been one of the sort of control people because I didn't feel anything go in. I didn't feel ill. I didn't get a bruise. I didn't get a dead arm. So I'm just thinking, was I like the placebo one? Like
Yeah, I'm kind of thinking that as well, actually, because I literally didn't feel the injection. It was so weird. I felt nothing. I was like, did she even do it? The lady that was giving it to me.
It's some sort of like moral scam. Okay, so that's good. COVID, that's not good, is it? Britain third wave, but flattening off. How do you feel about
that? I mean, I think you just summarised it really, flattening off. So I think it's probably likely that in this country we'll go ahead with the 19th of July, like full. Well, maybe it won't be a full reopening, but there will be another easing of lockdown restrictions. Yeah. And then we're just going to have to see, I think. But I mean, to be honest, the vaccines seem to work pretty well against this Delta variant that everybody is worried about. So maybe it was wise that the government just held the brakes a little bit to allow more time for more people to get vaccinated.
Yeah, I just don't see how, they've done the whole lockdown. They killed the economy for a year. If they were seen to be just being a bit sort of blasé about anything, they would be like crucified, wouldn't they? But also, they've got the power now, so they're just going to. Now we've given them the power, and we're so obedient, they're just going to use it. So yeah,
I know that's the worry.
I just don't see how they're going to. Yeah, like you say, it's probably not going to be a full opening. It's probably just going to be, this bit can open, that bit has to stay shut, and then switch it in and out, depending on which part of the country's getting nailed by the COVID.
I know, and the worry is that, as we go back into, the flu season again towards the end of the year, the government will be like, "Oh, restrictions coming back," which obviously could then weigh on the economy again over winter.
But in terms of the economy, the UK FTSE never actually made new all-time highs, did it? So
no,
that's got to be to do with the Brexit and the COVID. Surely, still, no, we just haven't got fully confident about anything yet, or overconfident about anything.
Yeah, I mean, yes, it is a weird one, isn't it? Because it's pretty much the only of the major indices in the whole of the developed economy world, really, that took a big knock, but then wasn't able to recover back to all-time record highs. If you look at the DAX and all the other major European indices, they're all, they have been pushing record highs. Obviously, same with the US and the other ones. So, I think the weighting of what industries make up the FTSE 100 are kind of important, aren't they? Because it doesn't really have tech. Obviously, tech benefited a lot from the pandemic.
But we've got mining and oil and stuff. So you'd have thought.
Yeah, true.
So we've had a bit more. I mean, we are in an uptrend. It's just we haven't made all-time highs. It's just.
Yeah. It is a weird one. It is a weird one.
Pound took a massive hit last week.
Yes,
but
we should definitely talk about that.
Yeah, but all right. So before you say what you're going to say, I think that's all dollar move. What do you think?
Yeah, well, 100%. It's all dollar move. Okay. Yeah, it's. I mean, that was the big story last week, wasn't it? The Fed more hawkish than expected with their new dot plot, and also they're moving towards talking about tapering the asset purchases now. Mm-hmm. But the dot plot, what did the dot plot say? Now anticipating 2 rate hikes in 2023.
Yeah, Eurodollar thinks it's going to happen end of 2022. So probably is going to happen. Yeah.
That's it. Yeah. So basically the beginning of the tightening cycle is pretty much on the horizon. And dollar just across the board just absolutely flew higher. I don't know if you is the Dixie chart any good?
Currently still lacking data, but in terms of but I've still got the FOMC candle marked up. I still expect the base of that candle to get tested at some point. Obviously, towards the end of last week, I was on the wrong side of that trade, if you like. But
I think a lot of people were, mate.
Yeah, I just assumed that there'd be like a push higher and then a quick, switcheroo before. Personally, I think the dollar goes higher, but I'm going to write about that later. But in terms of just like the near term data, the fact that we didn't get to 93 is encouraging for my first thought of we're going to like just test this big FOMC candle. But after that, well, I guess we have to wait and see. But yeah, personally, I've got some views about what happens to the dollar next. But yeah.
I mean, I before I make any definitive views as to like what I think is going to happen to the dollar next, I want to see how all this Fed speak this week goes, because I was reading a couple of the bank reports I was reading this morning. We're talking about how the Fed might be a little bit unnerved by the market reaction that's happened. Like, obviously, we've seen global equities come under pressure, dollar shoot higher, bond yields. Bond markets they haven't acted in a weird way, but they've acted in a way that suggests lower growth and inflation expectations in the long run, which is not really what the Fed is going to want to see. So if the Fed is a little bit unnerved by this market reaction, then you might see Powell or some of the other important members maybe sound a bit more dovish this week. And then if they do sound dovish, we could see some of this move unwind.
Yep. So in terms of this week, we've got a lot of central bank chit chat, haven't we? So
we do.
For me as a sort of day trader, that just ruins my day. But what do you think like, overall the central banks? Because today we've got ECB, haven't we, and a bit of Fed. So what do you think?
I mean, with the ECB, I think they're going to continue to try and take this opportunity to emphasize how much more dovish the ECB is versus the Fed, because the ECB loves it when the euro weakens, don't they? Because obviously it helps their exporters pretty much, and it also helps them reach their inflation goals. So that's the ECB will be dovish.
Yeah, so that's happening at the moment. The euro's under its 200 period moving average on the daily. We haven't made like a new significant low, but that'll
be the target though if this hawkish Fed, dovish ECB continues.
Yeah. Okay.
Definitely.
So that's today. Got ECB Lagarde speaking at 3:15. What's your big day for sort of central bank stuff?
This week it's Tuesday because you got Powell speaking, but there are other Fed speakers speaking as well. Like today, we've got a couple of Fed speakers around the US Open who might be interesting. We've also got the third most important member of the Fed, New York Fed President John Williams, speaking at 8 p.m. London time today. Like I say, he's the third most important, so he'll definitely be very closely watched. Pretty much. Aside from that, Powell on Tuesday.
Yeah, the New York Fed are like the ones that are in charge of the reverse repo sort of desk, aren't they? So they're the ones that buy and sell stuff quite rapidly. It'd be interesting to see what he has to say. Okay, so then Wednesday seems to be like the most, like the heaviest day for data. It's got German flash manufacturing PMI and then USD flash manufacturing PMI, all expected to be better than previous. Is that how you see it?
Yeah, flash PMIs are always an exciting day, aren't they? Like they tend to come with a bit of FX market volatility and volatility in other markets. And then we've got Bank of England rate decision on Thursday as well, which should be an interesting one.
Yeah,
especially in wake of the Fed.
Yeah, do you think they sound more hawkish? For me, like last month, everybody was waiting for the Fed to sort of make a move. Obviously the Fed made a move, but in the sort of repo sort of monetary sort of part of the system rather than the quantitative easing and the jobs type stuff. So it'd be interesting to see if the perceived hawkishness of the Fed translates over to the Bank of England to start with, or the Euro ECB.
Yeah. I personally think, like we were just saying, it won't translate over to the ECB. The ECB will want to position themselves as more dovish, but it probably will translate to the Bank of England, because typically, I don't know if maybe you've noticed this, but they tend to sound more hawkish generally than the Fed. So now the Fed has gone more hawkish. That almost gives them a green light themselves to go more hawkish, because they don't have to worry about GBP appreciating too much right now, obviously, because the dollar's really strong.
Yeah. What I meant about like translating is, in terms of like, the Fed didn't really do anything to do with the sort of dual mandate side of things. They just tried to sort of fix like a monetary sort of plumbing side of things. I was thinking there has been talk around the sort of PEP stuff in the ECB about some of them thinking there's just no point doing it in this low volume market. We might as well sort of pick it up again when there's a lot. So, but then if they did amend anything to do with the asset purchases on that side, I wonder if the market would see that as being either hawkish or, like a thing. And the same with the Bank of England, they're on about putting up, well, they were saying how inflation's going to require things like wages to go up and things, stuff like that. So if they're thinking inflationary in the near future with wages going up higher, I just wondered if they would make any sort of adjustments to their policy, because it only has to be a slight adjustment, it seems, and then the market just takes it to the, you give the market an inch and they take a mile. So that's kind of what I know. Just like, I wonder if they'll give them anything to do something with, because we're just so used to it just being as is, like, from 2020, just piling on the quantitative easing, piling on the stimulus, piling on, tax relief. So anything that sort of shows,
it's coming to an end now in a lot of these developed market countries. Like the EM countries, they were the lead indicator, weren't they? Because you had loads of them tightening, like Brazil, Russia, other EM countries tightening. And now you've got the G10 countries moving towards tightening. Yeah.
So come Thursday, we've got the Bank of England and then some final GDP unemployment claims. That's not going as well as I hoped it would for the US. Last week was a rubbish one.
Always interesting to watch.
And then we've got core PCE. That's a kind of a Fed thing as well, isn't it? They like to watch that one.
Yeah, that should be interesting, because we had the CPI numbers for May, which were really high. It was like 5% year on year, wasn't it? So let's see how high the core PCE goes. I mean, maybe one of the reasons behind why the Fed was more hawkish than expected was because it's worried about inflation.
Yeah.
We've had like inflation is really high at the moment in the US. Like it is.
It is. All right. So we've got maybe a weaker dollar to start off the London session. Aussie dollar broke underneath a sort of support line. So it'd be interesting to see if we can get back above that.
Yeah.
Pound fell like a rock, but didn't take out the sort of significant lows of April, March. Anything else that you think would be with the ECB, the Fed, Bank of England? I'm just kind of thinking euro, pound, and dollar index, really. And everything follows that.
Pretty much.
Cool. Anything else you want to sort of mention?
I think we've pretty much covered all the main things, to be honest. That's been basically Fed has been the main thing moving the market since last Wednesday anyway, and will be the main thing this week with all the Fed speakers.
Cool. All right.
Nice.
Have a great week, and I'll
you too, mate. Cheers.
Yeah, catch up with you again next week.